Good day, learners. Your teacher for today is Mr. Deluhlazo. We'll be doing accounting, and our topic today will be manufacturing. And under manufacturing, we'll be doing the production cost statement as well as the abridged income statement. Our learning objectives are as follows. At the end of this lesson, you should be able to explain the concepts relating to the manufacturing enterprise. You should be able to calculate the cost relevant to manufacturing. You must be able to prepare the production cost statement together with its notes, prepare the abridged income statement together with notes, be able to analyze internal audit and control processes relating to cost accounting, and also be able to solve the problems relating to cost accounting. Our cost accounts section is divided as follows. As you can see, the yellow blocks, those are costs related to the factory. You have your direct material, you have your direct labor, you also have your factory overheads. The three, they make your work in process in order for you to do the finished goods. When you go to the green slides, those costs, they are not related to the factory. Those are your administration costs as well as your selling and distribution. So we will dwell much on the two so that at least you understand the abridged income statement. Yes, my dear learners there at home, when you see this picture, it comes to your mind that this is an office. Yes, when we talk about an administration cost, we are relating to the office. So the explanation is as follows. Administration costs are costs incurred during the administration in operating the business. And the examples are as follows. We have your sundry admin cost. You have the rent of the office building. You must also pay your admin staff, and also your office equipment will depreciate. Also, the picture there, it shows you someone delivering the finished goods. It means these items are now going to the customers. That's why we are talking about the selling and distribution cost. So the selling and distribution costs are the costs incurred during the selling and distribution process. And the examples are as follows. Those are your commission for salespersons, the fuel expenses for the salesperson, the carriage on sales, your bad debts, salaries of the salesperson, also the depreciation on vehicles of sales representatives. Now we go into our production cost statement. This is the format of your production cost statement. As you can see, when you go down, you add the only item that you subtract, that is your work in process at the end, so that you can get your total cost of production of finished goods, which is this amount. So be careful, my dear learners, that when you go down, you add, you only subtract the work in process at the end. But also be careful of bottom-up calculations. When you start from the bottom going up, you swap around the signs. The minus will be the plus, and the plus will be the minus. Aha, here's another way of doing this. You have your finished goods ledger account. If you check on your finished goods ledger account, this amount, the work in process, remember when I started, I spoke about the three costs, which is your direct material cost, your direct labor cost, as well as your factory overhead cost. They determine your cost of production of finished goods. Remember on the first slide, this blue amount, which is the total cost of production, must be the same amount that you get on your finished goods ledger account under work in process. Let's check how do you do this. If you have your balance brought down here as an amount, and you have your balance carried down as an amount. So when you turn this way, you must know that you are calculating the working process, which is your total cost of production of finished goods. Which amount are we referring to? We are referring to this amount. But now, if you have to calculate this cost of sale, as you can see, my dear learners, I said it is 100%. The reason why I wrote 100% there, it is because at times you will be given the profit markup. So if you have the profit markup, you should be able to calculate your cost of sale, which will be 100%. You know you'll be using the UK method. Then, if you are using the ledger account, if you want to calculate the cost of sales, remember when we are calculating the total cost of production of finished goods, which is your working process, we started on this side, we went this way. But now when we want your cost of sale, you start this side, you go that way. You will get your cost of sales figure. And this cost of sales figure, it will be the same amount that you transfer to your abridged income statement. Hence, I spoke about the production cost statement as well as your abridged income statement. Okay, here is the format of our abridged income statement. Remember, the main aim is to get your net profit. Remember, I said this 100%, which is your cost of sale, must be the same as your finished goods ledger account cost of sale amount. Hence, the color are the same. This 100%, I repeat, my dear learners, please capture that one. The 100% of cost of sales must be the same as the 100% on your abridged income statement. So when we do this manufacturing, we're going to make sure that you do your production cost statement concurrent with your abridged income statement. Same applies when you do your income statement and balance sheet. You make sure that the transaction that affected your income statement will affect your balance sheet. That's what we're going to do. In order to save time during your examination, make sure that if the transaction affects the production and again affects the abridged income statement, you do it immediately. Don't wait up until you arrive to your abridged income statement. Okay, surely you've been waiting for this. Let's do our activity one, which was taken from your NSC November 2017 paper. So on this activity, they say the business produces the wooden tables. It is very important to capture what the business is producing. We are producing the wooden table, and they say we must prepare the following: the production cost statement as well as the abridged income statement. So my dear learners, let's do this together. Remember our format for production cost statement? We said it is our direct material plus your direct labor. You will get your prime cost. Then we must add our factory overheads. You'll get your total manufacturing costs. Then you must add your working process. Remember which one? At the beginning, you must subtract your working process. Which one? At the end. Then the answer that you'll get, it is your total cost of production. Of what? Of finished goods. Okay, then let's open again. Our abridged income statement. You'll have your sales, you less. What do you less? Less your cost of sale. Still remember that one? Okay, then you'll have what? Your gross profit. Then you less your other costs. Which other costs are they? Remember we spoke about the two costs which does not affect the production. That is your admin costs as well as your selling and distribution costs. Then our final answer will be what? Our net profit. There you are, my dear learners, with your formats. Okay, let's start then with our activity. Remember what I said to you? I said make sure you do both production cost as well as the abridged income statement concurrently. Let's go to our adjustments. Okay, our information is as follows. Always, when you have 2 years, dear learners, make sure you draw something like this. I call it a love arrow. What does this love arrow mean? It means where it starts, that is your opening. And where it ends, that is your closing. So that you make sure you never get any of the two incorrect. You draw the love arrow. I said, remember, where it starts, that is your opening. Where it ends, that is your closing. So information A, they say we have stock on hand. And what did they start up with? Work in process. Remember, work in process affects what? The production cost statement. So before you can even attempt the adjustments, start with the given figures so that you feed your production cost statement as well as your abridged income statement. They say our working process, which one? The opening. At the beginning, it was 160,000. You go to your production cost statement. Your working process, which one? At the beginning, it's 160,000. You are just feeding the information. Are you with me, my dear learners? Yes. Let's go to the second one. You still remember the leisure account, finished goods? Yes, here it is now. So let us check our finished goods leisure account. Our finished goods leisure account, preferably, let me draw the leisure, finished goods. Remember, you start with your balance brought down. It means balance at the beginning. You have balance, which one? At the end. Don't forget what we spoke about. You will have what? Your cost of sale. Then here you will have what? Your work in process, which is your total cost of production of finished goods. Don't forget that. So now, our finished goods, remember the love arrow, it says it's O, meaning the opening. Our finished goods were 336,000. Which one? At the beginning. So our finished goods is 336,000. I hope you are with me, my dear learners. Let's go to information B. Our information B, they say, production and sales for the year were as follows. We produced 7,200 tables at how much? At 330 per table. So now let us check. If you go to your production cost statement, remember the main aim is to find the total cost of production of finished goods. And they said we've produced 7,200 tables. So it means now to get our total cost of production of finished goods, we will say 7,200 multiply. Oh, my dear learners, let me increase the page. Yes. 7,200 multiply. How much was the cost of each table? Multiply by 330. I hope you have your calculator handy. Let's check it. 7,200 times 330. It means the final amount was how much? 2,376,000 rand. Aha. Remember this. Piece by piece, you feed in the information. I hope you are with me, my dear learners. Again, remember what I said. Your total cost of production of finished goods, that is the same amount that you'll write where? On your finished goods leisure account. Remember how much is the amount? It was 2,376,000. There you are. I hope you are with me, my dear learners. The same amount in the working process, that is your total cost of production of finished goods. Are you with me? Okay, let's go to the next one. Remember, you take it piece by piece up until you reach or you finalize your question. Then information C, they say costs were as follows, but before adjustments. Remember I said we must treat this topic as if we are doing your income statement. So if you have these amounts, remember it means those are amounts before the adjustments. So you go to the specific items, like we have your administration. Our administration cost, they say it's 148,400. You open a bracket, you say 148,400. Okay, you have your selling and distribution. Let me do that one. Selling and distribution, it's how much? 422,000. Let's go to production cost statement. Our factory overheads, it's how much? Our factory overheads, you have 487,200. Then your direct material, our direct material, you have 1,050,000. 1,050,000. Okay. Remember what I've just done, my dear learners? I just took the balances, I recorded them on both your production cost as well as your abridged income statement. That was before I took adjustments into account. Then let's go to adjustments. They say payment to EZ Transport. Ne? Payments of what? Of transport was 102,000. They say it was incorrectly allocated to selling and distribution. It was. This is key. This is key. It was incorrectly allocated to which cost? To selling and distribution. Then they say this was actually meant for delivering wood to what? To the factory. Remember the cost that I spoke about that applies to the factory? There were three: direct material, direct labor, and factory overhead. But this one, they are delivering what? The wood. It means wood is material. So now, this amount was incorrectly recorded where? In your selling and distribution. So it means we're going to subtract selling and distribution. Then you say minus. How much do you subtract? 102,000. Remember, this amount was supposed to go where? To your direct material. Immediately, you don't have to wait up until you arrive to your production cost statement. I said they work concurrently. So it means your direct material, it was subtracted there. You add it here. How much? 102,000. I hope you are with me, my dear learners. Let's go to the next bulletin. They say the cleaning contract for the year, it was 126,000 rand. Was shared between what? Factory and administration. Between factory, it means factory, if you check, that is number one. And what? Administration. Administration, that is number two. In the ratio, 2:1. What does that mean? It means these two represent the factory, whereas this one represents what? It represents the administration. So you check the order as to how was the transaction stipulated. They said factory and administration, then 2:1, meaning 2, that is your factory, and 1, that is what? That is your administration. So let's rectify this. Remember, they say 126,000 was shared between factory and administration in the ratio 2:1. Then when it continues, they say, however, the 80% should have been allocated to factory, meaning the 2:1 formation, it was incorrect. So you must rectify it so that it can be what? It can be your 80% as well as your 20%. We are rectifying that. Let's check then, my dear learners. All in all, it was 126,000. Preferably, let me do the ledger so that you understand it better. Our factory overheads, our factory overheads. The amount was 487,200. That was the balance. Ne? That was the balance. Then they said 126,000 was allocated by mistake in the ratio 2:1 because they said 2:1. Remember, this is what? The factory. Then the other one, it is what? The admin. You have to add the 2 so that you check the portion. So it means all in all there were 3, then 2 portions goes to factory, 1 portion goes to admin. How much was that? It was 126,000. So let's check how much went to the factory. So it is 126,000 times what? Times 2 divided by 3. Remember, this one is for factory. Times 2 divided by 3. 126,000 times 2 divided by 3. It is 84,000. It means this 84,000, it was incorrect. It was recorded incorrect. So we must remove it. So you will say 84,000. Are you with me, my dear learners? Then because it was 84,000, you can say 84,000 minus 126,000. It will be 42,000. So this 42,000, it means goes to what? Goes to the admin. But let's prove if it's correct. It will be 126,000 times, it was what? Admin times 1 divided by 3. So 126,000 times 1 divided by 3. Indeed, that is 42,000 rand. I hope you are still with me, my dear learners. So now, let's check then and record the correct one. They say, however, 80% should have been allocated to factory. If they say 80 must go to factory, it means 20 must go to what? To admin. So let's check. You will say 126,000 times 80%. It's how much? 126,000 times 80%. It is now 100, 800. There you are. Again, minus 126,000, 25,200. Meaning now, this is the correct ones. This one was for factory. This one, it means, will be admin. You can say 126,000 times 20% should give you the same amount. 126,000 times 20%. Indeed, we are correct. So let's record them now. Remember, we removed the 84,000. Now we recorded the correct one. The correct one is 100, 800. Let me close it. If you add the 2, 487, 200 plus 100, 800, 588,000, 588,000 minus 84,000. It means this amount is the amount that should go to the face of your production cost. That is 504,000. So if you prefer leisure, you may do the leisure account and give it a reference to your production cost statement. Or the other one can do this. And the same thing, production cost statement can say minus, let me change the color, can say minus, remember it was 84,000. Then say plus, how much? 100, 800. So how much will it be? 100, 800 minus 84,000. You'll say plus 16,800. It means the factory overhead amount was allocated 16,800 short. Remember, we were just rectifying. You'll say this 16,800 that you've added there, you go to your admin. You say minus 16,800. But let's check, how did we get this 16,800? Okay. Let me go back. Let's do this. You can say your leisure account again, just to understand it better. Your admin was 148,400. Remember how much was allocated by mistake. 126,000 divided by 3. It was 42,000. You minus the 42,000. How much was the correct one? Remember we said 126,000 times 20%. It was the correct one is 25,200. Same thing that we did with our factory overheads. You add the two, 148,400, 173,600, 173,600. Minus the 42,000 is 131,600. Meaning the 131,600, it is the amount that must be recorded in your abridged income statement. 131,600. Let's check if we are correct. Can say here minus 42,000 plus, remember how much? Plus 25,200. Must give you same amount. So 42,000 minus 25,200. Indeed, 16,800. We get in there, dlns, piece by piece. Don't forget. Okay. Let's continue then. Then they said the prime cost is 1,800,000. So you have your prime cost and it's given. So you'll have 1,800,000 rand. Then let us check how much is our direct material. We have 1,050,000 plus 102,000. You will have 1,152,000. Remember what I said when I started? I said you must be careful of the bottom-up calculations. I said when you start from the bottom going up, you change the signs. So now you can be able to get your direct labor. Since you have the prime cost and the direct material, you just subtract the two, then you'll have 648,000. So 1,152,000 plus 648,000 equals to 1.8 million. Then let's calculate our factory overheads. 487,200 plus 16,800. That equals to 504,000. So it will be 504,000. Let us add the 2 plus 1,800,000. That will be 2,304,000. Ne? Are you still with me, my dear learners? Then you will have a contra detail column that does not have a heading. So 2,304,000 plus 160,000 equals to 2,464,000. So which one now are we looking for? The working process at the end. It means that was our balancing figure. So you say the total cost of production minus that amount 2,4. So minus 2,376 It means now our work in process was how much? 88,000 rand. But remember, we said work in process at the end, you must do what? You must subtract. You must indicate by showing your brackets. Then you are done with your production cost statement. But remember what I said when we started. Once you have this total cost of production, it goes where? To finished goods ledger account in case you are doing your abridged income statement. So let us check so that we finish it as well. Our selling and distribution is 422,000 minus 102,000 equals to 320,000. Let us add these two plus 131,600 equals to 451,600. That is 451,600. Remember, you do what? You subtract them. But now, let's go to our finished goods so that we can get our cost of sales. All right. Let's check then. They said in information B, we sold 8,000 tables. How much did we receive? 4,080,000. Meaning when you go to your abridged income statement, your sales will be how much? 4,080,000 rand. Are you still with me, my dear learners? Okay, let's check then. It means now we are left with our cost of sale. It means now this information A, the finished goods, is going to help us. They said 400 tables were on hand. Remember, the love arrow guides you. Were on hand, and we value them using first in, first out method. How many tables were on hand? 400. But remember, how much was the total cost of all tables? Was 330. So what does that mean? It means now when you multiply the two, you will get the value of finished goods on hand. So let's go to our ledger account. There you are. Our finished goods at the end will be how much? 400 times how much? 330. So let's do it together. 400 times 330 is 132,000. So now can you see what I was talking about when we started? Remember I said when you want the cost of sale, what do? This way. It means you add the two, you subtract the balance at the end, you will get your cost of sales as your amount that has to go to your abridged income statement. 336,000 plus 2,376,000. That is 2,712,000. 2,712,000 minus 132,000. Our cost of sale, it is 2,580,000. Don't forget, this amount, it should go where? It should go to the face of your abridged income statement. Let's check then our abridged income statement. There you are. We said it's how much? It is 2,580,000. You subtract that to get the gross profit. I got 1.5 million. Then you subtract your other costs, meaning our net profit for the year will be 1,048,400. Then you are done. You have all the marks. Don't forget, my dear learners, love arrow is very important. If you have 2 years, immediately what you do on your abridged, you must do it on your production cost statement. That is the end of our first activity. Let's go to the next one. I hope you understood this activity and you saw the tricks, how easy it is to get your final answers. Okay, let's go to the next one. Okay, the next one, my dear learners, I'll be teaching you about the break-even point. One is asking himself or herself to say, why this picture? Why this diagram? Is this all about gender equality? No, my dear learners. Yes, it is break-even point. What does it mean? Your expenses must equal your income. What does that mean? It means you will never have the profit nor the loss. That is the main thing. Remember break-even point? No profit and no loss. This diagram will summarize it. Let's say we go and buy a car in an auction, then the car worth how much? 20,000. Then we repaired the car. We repaired what? The car. When we repaired the car, we repaired and we paid 3,000 rand. But now remember, the amount of the car was how much? It was 20,000. Then the repairs was how much? 3,000. But we sold it for 23,000. We used 23,000 and we sold it for 23,000. Did we make any profit? No other loss. No, we didn't. That's now our break even. It's very much important. I hope you understand that, my learners. You do that, you calculate your break-even point before you can do anything. The first thing in manufacturing, you calculate your break-even point first, which will be a guidance as to how many units must you produce first before you can get a profit. Let's check an activity. Okay, here's an explanation. We said break-even point is a point at which we have enough income to cover the expenses. It is also refers to the number of units you need to sell before you make the profit. This is very much important. The fixed cost. Actually, the break-even point formula. Beg your pardon. The formula, it is your fixed cost divided by your selling price per unit minus your variable cost per unit. Remember when we started, we spoke about 5 costs. You must know which costs are fixed costs and which costs are variable cost. When I teach this is what I do. You must know that your fixed cost, that is your factory overheads, plus what? Plus your admin. But now, your variable cost per unit, I call them triple D. What does this triple D mean? Your direct labor, your direct material, and your distribution, meaning your selling and distribution. Remember, your fixed costs are costs that stay constant, irrespective whether the production increases or decreases. And your variable costs are costs that change irrespective whether the production increases or decreases. But now, this is vice versa. Fixed cost, you see these 2 letters are not the same. But variable cost, you see these 3 letters are the same. Don't forget, it is vice versa now. The variable cost, spoke about the triple D, so that you remember fixed cost, that is the remaining 2 costs, which are not the same. Factory and admin. Direct material, direct labor, and your distribution. Okay, my dear learners, I hope you get that one. Let's go to an activity then. This activity was taken from NSC November 2017. They say gymwear manufacturers is owned by Jan. They produce shoes and shirts. It's very important, remember, my dear learners, to know what are you producing. They produce shoes and shirts for gym training. Jan requires assistance in interpreting his 2017 results. They say required, calculate the break-even. Remember the formula? It is your fixed cost divided by what? Selling price per unit minus variable cost per unit. So let us check our information. There you are. They say our fixed cost. Remember, we are calculating fixed cost for what? For shares. Please, dear learners, your answer book is not your question paper, but what is written on your answer book, it is a summary of what is in your question paper. Frequently check your question paper so that you know which product are you dealing with, because we have two, the shirts and the shoes. So let's calculate our break even. That's question number one. Our total fixed cost, here they are. It was 530,000. You divide by what? Selling price per unit. Here it is. Your selling price per unit, how much? 302 minus. Your variable cost is how much? Here it is, 238. Okay, 530,000 divide 302 minus 238, it is 64. So how much is your break even? 530,000 divide by 64. That will be 8,281. What? Units. Don't forget, always your break-even point must be addressed in units. It must never ever be in rand. So it is important to know that your break-even point, it is in units. So let's go to the question number 2. Okay. Question number 2 is as follows. They say Jan is not satisfied with the variable cost per unit, even though the total variable cost per unit decreased by 6 rand. They say identify how many? One variable cost. This is very much important. They say with figures. That has not been well controlled. Remember, variable cost, they must never increase, they rather decrease. They say give 2 possible reasons. Let's go to our information and check our variable cost. Here's our variable cost. Ne? If you check direct material, what happened from 2016 to 92 to 2017, it has decreased. Remember I said when you have 2 years, what must you do? You draw what? The love arrow. So it was 116, it is 92, there's no problem. But direct labor, it was 100, it is now 131. It means that is the variable cost that has problem, it has increased. So it means your answer, the variable cost that has problem, that will be your direct labor cost. You'll say your direct labor cost increased. Here, my dear learners, it's very important. You talk about the trend, don't forget about the figure. Number 1, it has increased. By how much? It was 100, it is now 131. It means it has increased by 31 rand. From 100 rand to 131. Remember the question, what did they say? They say give 2 possible reasons for this problem. What might be the problem if direct labor increase? It might happen that the union have negotiated an increase for employees. So union might have negotiated increase for employees. Or someone can also say employees worked overtime. That might be one of the reasons. Then question number 2, then they say, explain why Jan might be concerned about the large decrease in the other 2 variables. Remember, we spoke about 1 variable cost. So it means the next one, you'll be left with the 2 variable costs. Which are those? Let's check. It means that is your direct material. Let's have our direct material cost. Let me do this. Our direct material cost, let's check. It was how much? 116. It is now 92. Let's check the question. What did they say? They say, explain why Jan might be concerned about the large decrease in the other 2 variable costs. What might happen if the direct material decrease? It might happen, we are buying now material with low quality. It might happen, we buy material with low quality. This might lead to what? Inferior quality as part of supply. Then let's check the other one, selling and distribution. If selling and distribution, it was 28 to 15, it decreases. It might happen that we decreased advertising. Advertising decreased. Are you still with me, my dear learners? So if advertising decrease, it means what's going to happen? It means now we're going to have low sales. People are no longer buying. It means now we are losing. That will be your low sale. That is a concern. Or one other person might say, they decreased what? Amount or remuneration of sales person. What will it do to the salesperson? It will discourage the sales person, which will lead to lower sales. I hope you understood that one, my dear learners. Let's go to the other one. They say Jan does not understand why the unit cost of production has increased. The what? The unit cost of production has increased when neither his fixed cost nor the variable cost have increased. Explain why this is so. State one point with what? With figures. It is very much important to know that when they say with figures, it does not relate only to the rent value. It can be a percentage, it can be in units, if it is numbers. So let's see, how do we answer that one? Let's go to information. The unit cost has increased from 228 to 242. Let's check. What might have happened? Check your units produced. It was 25,000. It is now what? 16,100. Means answer number 1, you can say the units produced decreased. Decreased by how much? It was 25,000. It is now 16,100. 25,000 to 16,100. decreased by 18,900 units. There you are, my dear learners. Or you may also use the total fixed cost per unit. You calculate for the previous year, you calculate for the current year. Check the difference, you will see it will decrease. Hope you understand this one, my dear learners. Then let's go to the next question. Okay. Remember the previous question, it was relating to what? To shirts. Now this one relates to shoes. Let's check how do you do this one. They say calculate the percentage increase in selling price of shoes. So when they talk about the increase in percentage, my dear learners, you must know that like now there at home, you are accounting learners from different provinces. Then who's the mother body? The mother body is what? It is DBE. Why am I talking about DBE? Department of Basic Education. When you calculate the percentage increase in selling price, don't forget you use what? The DBE. Why DBE? That will be your D, you divide by your BE. Ne? Then the D stands for what? For the difference. Then the BE stands for what? The amount before increase. Don't forget the DBE. So let's check the information. Remember now we are dealing with what? With shoes. Love arrow is still very much important. Opening, closing. Let's check the selling price. It was 1,260. It is now 1,640. I said you must check what? The difference. 1,260 minus 1,640 equals to 380. Divide. How much was the amount before increase? 1,260 times 100. So it's 380 divided by 1,260 times 100. You will get how much? It is 30.16%. That is your answer. I hope you understood that one, my dear learners. Don't forget, difference divided by before. Let's go to the next question. And next question, they say, Jan decided to improve the quality of shoes and to export them. The quality of shoes and what? Exporting. Remember, when we export now, you must think about selling and distribution. And when we talk about quality, we are talking about direct material. They say, explain how the direct material cost and the selling distribution cost were affected by this. Remember what I said. The trend, that is number one. Trend. Secondly, the figure. Let's check what happened. We are referring to the shoes. Okay. And let's go back. My apology. Here's our information. Then the direct material was 330, is now 456. It means you'll say direct material cost, the trend. What happened? It has increased by how much? It means it was 330, it is now 456. It has increased by 126 from how much? 330 to 456. Secondly, selling and distribution. Same thing from 28 to 194. The trend, it has done what? It has increased. By how much? 28 minus 194 is 166. From 28 to how much? To 194. There you are. You've answered them. Don't forget the trend as well as the figure. It's very much important. Then let's check the next question, probably the last. They say, Jan was concerned that the increase in price will have a negative impact on the business. Explain whether his concern was justified. State 2 points. Let's check information. The net profit, let's check number 1. Love arrow, very important. Opening, closing. Net profit, it was 1,183,000. It is now 2,379,750. So what will you say? The trend, same thing. Your net profit has increased. By how much? 2,379,750 minus 1,183. It has increased by 1,196,750. That is your 1,183,000 minus 2,379,750. Remember they said 2. Let's check the other one. Check the selling price, the unit, we spoke about it. Also the units produced. Ne? Your units produced, what happened to them? They increased by how much? 6,500 minus 7,750. They increased by 1,250. That is from 6,005 to what? To 7,750. That is our lesson from today, my dear learners. I hope you understood what is going on. Try to simplify it up until we meet next time. From me, Mr. D, your accounting doctor. Cheers.